All right, everybody, it is that time. Yeah, let's do this. It's going to be interesting, and we have a lot of stuff to cover. Look, first of all, it is Tuesday, August 6th, 2019. Dynamics in this market are changing rapidly, and the fundamental factors that are supposed to be supporting this market are deteriorating rapidly. So what does that mean? Very simple. There is a very high downside risk, despite what's happening in the market right now. As I am doing this video blog, stocks are higher across the board, although well off of their highs of the day. Again, this is that knee-jerk. You get a little bounce when you get a substantial drop like yesterday. We fell 770 points. The last time I looked out was up 130 points. I mean, big freaking deal. Let's look deeper into what's going on here. The bond market remains an absolute disaster area of epic proportions. And I don't know how many of you are watching CNBC and Bloomberg and Fox, but there is damage control going on right now. They're parading out the propaganda ministry, and all kinds of lies are being told across the board. You know, let me just say this real quick. Let's talk about the biggest one right now. So we understand that the narrative is that we are taking in billions from China, for which China is not paying the tariffs. Look it up for yourself. I just posted another article from Reuters explaining how China is not paying the tariffs. Are being paid by the importers. This is how it always works, but you're not supposed to know that. You can't know it. Otherwise, if you knew that, it would kind of, maybe not allow the narrative to flow. So let's expose this lie for what it is. We're not taking in any money at all from China. And let's just do some basic math, and I'm going to round off figures here. Prior to the last batch, let's back up. This last hit 10% tariffs on 300 billion. So what does that come to? 30 billion that we're taking in from that batch. But let's go back. Prior to that, we apparently, and this is a fact. Okay, so let's lay out what the facts are. The facts are, prior to this last batch of tariffs that the president just hit China with, we were taking in roughly, I mean, this is a rough number, roughly 27 billion in tariffs. Now, with this added 10% on 300 billion, so 30 billion, what does that come to? Less than 60 billion, okay? All right. So that's number that apparently we're taking in from China, and it's very happy, and we should all be, gleeful about it. But however, as of the first of this month, thus far this year, the U.S. trade deficit with China is over $180 billion. Do the math, people. So how are we taking in anything? It's a freaking total lie that keeps getting perpetuated. And the president was out this morning in damage control trying to explain, oh, we're okay, we're taking in billions. Mr. President, stop lying. Level with the American people. It's propaganda, and I think we all get it. But I don't understand why, Mr. President, you got to keep perpetuating this lie. People are not that dumb. They can do basic math. It's incredible. Anyway, so with regard to this market here, the bond market is, again, it's no longer just flashing red. We have a steady red, bright red light. And this yield curve issue is telling us that something very bad is coming down the pike. And again, we're watching that 2 to 10 spread, which keeps getting more narrow. Okay? And I will keep all of you on top of that. When it does invert, and it could be soon. I mean, there's a very small spread here. We will again have to take action at that point. But again, remember, there's a lag time. Even when the 2 to 10 inverts, there is a lag time if history is any guide. So there's still no need to panic here. I explained this to you days ago. I said this is just a time for you to think about how you want to play your investments that only make cash when stocks go up, because no one here, including myself, is smart enough to tell you exactly when the big sell-off is going to happen. But we have clues. The clues are all over the place. Number one, we have the bond market telling us what's going on here. But look, I'm going to outline this real quick again. The big sell-off, and I mean the big one, is going to be when we get a snapback in the bond market. When we see an uncontrolled sell-off in the bond market. Let me explain this to you real quick, because most people don't understand there's an inverse relationship in the bond market. When bond yields drop, that means cash is going into the safety of debt. You understand? It's still being perceived as a safe haven, just like the dollar is right now. Okay. When cash is being dumped out of the debt market, yields spike. This is going to happen because it's in the biggest bubble the world has ever seen. It's very simple to understand. Look, what do we know about bubbles? It's an extremely simple concept. Despite every effort imaginable to keep a bubble suspended, we reach a point where no matter how much effort is put into keeping that bubble suspended, it just can't handle it and the bubble bursts rapidly. Okay? At one particular time, whenever that may be, again, we're going to watch that 210 inversion, but that's not the big one. The big one is when we get that sell-off and yields spike rapidly. When yields spike rapidly, we're going to get the opposite effect of what we've been seeing now for the past decade. When yields spike in an uncontrolled fashion, and it's not just Greg Mannarino saying this is going to happen. It is going to happen. I've been probably one of the first guys to explain it, if not the first, yet again from years and years ago. But there's some pretty lofty people out there explaining the same thing, including former Fed Chair Alan Greenspan. He says there's a high risk of this happening. Many multi-billionaire hedge fund managers are saying the same thing, and they're all waiting for it. They all know it's going to happen. So we get an uncontrolled sell-off in the debt market. Yield spike puts in an enormous amount of pressure on stocks, which will sell off like you have no idea, because everyone wants to get out the door first. Cash is simply going to look for places to go. It doesn't go to money heaven. There is no money heaven, okay? It's just going to simply go into other assets. And this is why I've been explaining to you since like time immemorial, bet against the debt, become your own central bank. Put your cash in other assets, basically. And I think, honestly, like a little rally like today, this may be a point where you want to think about pulling profit here in this market and just reevaluate as we move along. Me, I've become quite a day trader as of late using my quant system, which is frankly invincible. I mean, have I had a few losing trades using my quant system? Absolutely, I have. But the amount of wins I have had trading the system is staggering. It's just almost to the point of being supernatural, and I'm not kidding. And I've been hearing from people all over the world, mostly here in the United States, who are utilizing the quant system. Utilize it. It's free. Right on my freaking website. Link in the description of this video, traderschoice.net. Anyway, look, I hope I put a light on a few things here for you, exposing the lie about the billions we're taking in. It's such a freaking lie. And I'll tell you something, it gets under my skin. I'm not bashing anyone. People think I bashed the president by speaking the truth. These are facts, okay? If you want to dispute them, go ahead. But this is the way it is. Anyway, that's where we're at right now. It's pretty incredible, and the risk remains very high for more downside risk in this market, downside price action. So let's watch this. Let's keep our eye on that debt market. Listen for more propaganda, more damage control, because that's all it is. We're in dire straits here, and our economy is not doing well. Larry Kudlow this morning on CNBC was blowing sunshine up the crack of everyone trying to convince them that our economy is so strong. No, Larry, we all know it's not strong, hence the calls for rate cuts, hence the call for quantitative easing. The president actually called for quantitative easing several months ago. We're not that dumb, Larry. We're really not that dumb, and we can add as well. All right, with that said, I'm going to let you all go. This guy right here loves you a lot. It's the truth. And I'll see you at the end of the day.